Hello everyone, thank you for joining and welcome. I hope your week started well and I hope you can all hear me. So this is Yanko speaking here, and we're starting another week of trading strategies today and tomorrow. On Wednesday we'll have a MetaTrader 5 webinar again. So welcome everyone, and thanks Sebastian for your feedback. So I'm glad to hear you can hear me loud and clear. Today we'll review two trading strategies. One is quite simple, it's for the gold, but for other currency pairs on the 15-minute chart, and the 5-minute chart even. And the other trading strategy is mainly for the 1-minute chart. So these two strategies are basically for scalping or short-term trading strategies. Thank you, Wilfred, and again I wish you all a good start of the week. So again, it'll be I guess maybe a bit shorter today, but we'll just review these two trading strategies, and we'll talk about some of the indicators, mainly and namely the Heikin Ashi smoothed indicator. We spoke about the Heikin Ashi already in previous webinars. I mentioned that Heikin Ashi in Japanese is average candle, and these Heikin Ashi candles, what they do is they eliminate noises by averaging the price and drawing candles that are different, that are not different, but they show the average price, and they take the average of the high, low, close of previous prices, and they don't show the exact open and close of the current candle, but do some calculation in order to smooth or to make an average of the trend, so that even if there are during a downtrend there are bullish candles, or in an uptrend bearish candles, still the Heikin Ashi candles remain red in this case, even during the downtrend, and blue in the uptrend. Okay, so basically let's see, for example, here you can see that all these Heikin Ashi candles are red, although we have some bullish candles. We have one here, we have one here, we have a few here. Whereas, for example, in this uptrend we can see bearish candles here or here. Okay, so the Heikin Ashi candles average the regular candles or the regular price, but more than that, the Heikin Ashi smoothed candles also make take a shape of a moving average. Okay, they smooth the trend. If we compare the regular Heikin Ashi to these smooth Heikin Ashi candles, let's let's open another gold chart here. Okay, I'll just apply these Heikin Ashi candles. So we can see here Heikin Ashi, this is the 15, okay, the 15 again. Okay, so you can see the shape of the candles and the trend. You can see here it's much choppier, okay, and we can see here some bigger candles, whereas in the smooth Heikin Ashi you can see how much smoother it is. Okay, it's because it's not only averaging the price, it's averaging the movement just like a moving average. Okay, so the smooth Heikin Ashi candles smooth the trend and give us both the the momentum according to the color. Okay, the color, if it's blue in this example, it's bullish. If it's red, it's bearish. And it gives us sort of a moving average that can serve as support and resistance, and also give us, again, a clearer notation, or a clearer, I would say, feeling of the trend. Okay, here we see the blue and the red, and we can see that basically it's going up, but the choppiness of the trend may cause us to hesitate. Is it an uptrend or is it going sideways? Whereas here we can see it's really smooth, and the uptrend is much more noticeable. So we'll see these smooth Heikin Ashi candles in both trading strategies today. Unlike the regular Heikin Ashi candles, the smooth Heikin Ashi candles are not part of the MetaTrader. Okay, they're not part of the platform. The Heikin Ashi candles are under custom indicators here, whereas the Heikin Ashi smooth indicator is something you have to add to the MetaTrader. You can look it up online and download it from many forums, especially the Forex Factory forums. But I guess you can find it anywhere else. Okay, Heikin Ashi smooth.mq4 or ex4, or ask it from your account managers. So these are the Heikin Ashi smooth candles, and the green line here is basically just the close price line. Okay, it's just this line chart. Instead of looking at the candles themselves, okay, the Japanese candles, we just set this close line so we can see the Heikin Ashi candles better. So this is the upper part of the trading strategy, which is, again, from what you received on your to your email, it's a scalping strategy for gold. But you can, we'll see, we'll take a look at it with other currency pairs or other instruments too. And you can see here the 5-minute chart. Okay, if you wish to trade shorter time frames, the bottom screen is a multi-time frame indicator. You probably know it or know a version of it. We saw it in previous trading strategies, the Tudor Girl. This is a multi-time frame indicator that gives us the trend in several or multiple time frames. So we have the 15-minute, the 30-minute, the 1-hour, and the 4-hour charts. And basically what we're looking for in this trading strategy is obviously trade with a trend. Okay, and the trend is defined by having, if it's an uptrend, having blue Heikin Ashi candles with the price above it, above the trend, or above the blue Heikin Ashi candles, above them. Why? Because again, these Heikin Ashi candles are smoothed, so they're basically just like a moving average. And since they're like a moving average, they show the trend, and we want the price to be above the moving average. Okay, so for an uptrend, we want the green line or the candles to be above the Heikin Ashi candles, the Heikin Ashi smooth. For a downtrend, we want the red Heikin Ashi candles and the close price below these Heikin Ashi candles. Okay. Obviously, with the multi-time frame, we prefer having all of them in confluence or in concordance, meaning if it's a downtrend, we're looking for all time frames to be red. Okay, so basically here, this red line here on the left, this indicates where the downtrend is started, okay, or was confirmed. So we have red Heikin Ashi candle, we have the close price, and I'll elaborate on the distance from the close price to the Heikin Ashi candles. But we can see the close price here, and we can see all time frames in red. Okay, all time frames in red, and that gives us the signal to go short. Now, as for the entry point, we can see here that the close price is pretty far away from the Heikin Ashi, or from this moving average of the Heikin Ashi smooth. Okay, we see here two big candles. So what you can always wait for or look for is for a retracement, because you don't want to go in too far to enter a trade too far away from the Heikin Ashi candles or from the moving average, because obviously the price will try to retrace back and get closer to the candles. So always try to look for a more specific entry point and wait for a retracement to have a better chance to take more out of the market and to set your stop loss closer to the entry point. Wilfred, as for the multi-time frame indicator, it's not installed on the MetaTrader. It doesn't come built in with the platform, but it does. I guess again, you can find it online. You can ask it from your account manager, because we also saw it in previous trading strategies. So your account manager is probably your account manager has other trading strategies, and I think this one too, and they can send it to you. If not, again, I'll write down my email here, yanko.fx@gmail.com. You can always send an email to me and ask for the indicator. Okay, just a second, guys, please. One moment. Sorry, I'm with you. Okay. So again, wait for a retracement so you don't enter too close. And again, you can obviously try to time your entry at shorter time frames. Okay, let's look at this area here and move back to the 5-minute chart. Okay, so you can see how the price retraces back to this Heikin Ashi. Okay, to this area. You can always wait for the price to retrace maybe a bit more to the area of the previous support. Okay, but in this case, the trend is so strong that it gives you it doesn't even give you the chance of retracing more, and it just stops here around the moving average and continues. Okay, so either you try to enter around this area of the moving average. Obviously, if you miss it, you can always try to enter when the price breaks a trend line or a support line. In this case, you can see here the trend line from these two bottoms here. Okay, we stretch this trend line. You can see the price closing above 1, 2, 3, 4 candles. This candle closes below the trend line. You can always enter here. It's still, okay, it is still higher than the previous low. Okay, so, and it's very close to the moving average, to the Heikin Ashi here. So it gives you a perfect entry point, and you can enter right here, and you take here quite a good move. Okay, so that's a good entry point. Obviously, you can see all the multi-time frame indicator gives you a go. Everything is red. That's a perfect entry point. As per the stop loss and where to exit or take profit, so obviously a stop loss should be above resistance lines. Okay, and since again this is a moving average that can serve as resistance, you can set it just somewhere above these candles. Again, not too close, because especially with gold, which is sometimes very volatile, you don't want to be stopped out. but somewhere above this resistance line. It's above the Heikin Ashi, it's above previous support, yeah, so somewhere I would say around, yeah, around here somewhere, okay, and or even a bit lower, because you can already see you can see the Heikin Ashi moving lower. You can, as the trend goes, you can keep moving. You can keep moving the stop loss along this along this Heikin Ashi, and probably or preferably start scaling out in one of these conditions. Either you start seeing in the short-term trends that the multi-time frame that the red turns to blue in this case, or that the trend is weakening. Okay, so here it's not all red. Obviously, if it remained red, we would probably see another decline of the price, another decline. But here, the price starts moving sideways, and we can never know if it'll retrace back or not. So, starting to close or scale out when the multi-time frame is no longer all in one color. If you see the price retracing back, okay, for example, here that we had some high, okay, we had a high, we had the price going down, finding resistance, going down again and up, and here the price started going up, and we can see that the Heikin Ashi candles turned to blue. Okay, they're turning blue, from red to blue. That's the time to say, okay, thank you, we took whatever we took here, which is very nice. It's a beautiful trend. You take whatever you take and you scale out. If you want to leave a little bit, some of your trade and be stopped out with a trailing stop or with the stop loss somewhere up high, then fine. But basically, when you start seeing blue Heikin Ashi candles and blue squares here in the multi-time frame indicator, it may suggest a weakening. Okay, if the colors are reverse, a weakening of the trend. In this case, the downtrend. Again, in hindsight, obviously we see that the trend continued and gave us a beautiful beautiful setup for more pips, but you can always re-enter. Okay, you can always re-enter, especially if you see this, if you see the support line around here breaking. Okay, the price broke the support line, tested it again. Okay, we can see it here, breaking of the support line, testing it again, and going down. Okay, so we have again everything here in red. All the multi-time frame indicator lines are red. The Heikin Ashi is red. The candles or the price is below the Heikin Ashi. So, and you can always enter again here. You don't have to wait all this time. You can always re-enter and take another few dozens or hundreds of pips. It depends on the currency pair or the instrument you're trading. Now, again, this is for the short time, because you can see that the multi-time frame starts from the 15 minutes. So you can work on the 15-minute chart or the 5-minute chart. Okay, it's up to you to decide which you want, which time frame you wish to trade. You can always look for the trend on the 15-minute chart and try to time your entry and some of the exits on the 5-minute chart. Okay, so again, it's up to you how much you want to sit in front of the chart and how much you wish to take, and how much you want to follow the chart, because obviously with the 5-minute chart you need to follow it more often than the 15-minute chart. If you have any questions, please feel free to ask, and in the meantime I'll just grab the euro dollar, for example, here to see its behavior with this trend. You can see here with this system, you can see that I'm sure you all know that there was a huge gap during the weekend. The euro dollar started gapping something like what was it, 120 pips more or less, a bit more. And you can see how the Heikin Ashi candles make this gap disappear and smooth it out. But here again, let's say around Friday afternoon, there was a nice, or here it was already evening. There was a signal for taking long. I wouldn't enter a trade during the last few hours of the week. But here, for example, we can see a nice setup for taking short. For those of you, again, who wish to take only, short trades and, are not waiting for the 4 hours to change, because if you're waiting for the 4 hours, you may miss some very long, some very nice trades, okay? So for those of you who have more experience, who are a bit more aggressive, who are who are willing to take more risks, you don't always have to wait for the 4-hour time frame to give you the same signal as the other time frames, because then again you may miss some intraday trades, especially when the trend changes during the day. So you can see here that the 4-hour chart, or the 4-hour time frame, is blue since somewhere during the middle of the week or last week. But there were some very nice trades on the downside, okay, downtrends during this this whole time that the H4, the 4-hour chart or period was blue, or was signaling up. So again, those of you who feel more comfortable to take counter long trend trades within the daily, or let's say the hourly or the 15-minute charts, can try to take these trades. But again, there is more risk to it, okay? Because when the longer trend is in concordance with the shorter time frame trends, your trades are safer. You can see here, however, that this trade here, which is like an 80 or even 90, almost 100 pips here during this morning, those of you who would have, who didn't take it because of the 4-hour indicator, would have missed, would miss this this move. Okay, so basically this is the trading strategy. It's quite simple. You can always try to wait, to analyze the chart, and then analyze the chart on the longer time frames, and then try to trade on the shorter time frames with this system. And again, Marshall, the signal, the entry signal, okay, or what determines the entry signal is for long, okay, for taking long, is when all multi-time frames, or at least, again, for those of you who are a bit more aggressive, or at least 3 of them for the long trend or the long trade, the 3 of them or 4 of them are blue, the Heikin Ashi candles are blue, and the price is above the Heikin Ashi. Okay, that's the signal for long. So I would say somewhere around here is a signal for long for those of you, again, who are not waiting for the 4 hours to change. And for short, it's when all indicators are red, the Heikin Ashi is red, the price is below the Heikin Ashi. Obviously, the Heikin Ashi needs to be in direction with the trend, rising uptrend for long, and descending downtrend for short. And here again, that's a good area to enter, okay? Just at the end of this rectangle. Look at it here. You can see we have this the H4 turning red. All the rest are already red. Okay, we have a support line here. Let's look at the candles here. Okay, and I would say enter here. Okay, during one of these candles, either when this candle closes below the support line, or when you see the retest of the support line. It's just a 15-minute chart, so the moves here are not very long, and you don't have to wait a lot, and you can enter here. So again, Marshall, to enter short in this example, you have all the multi-time frame indicators in red. You have Heikin Ashi in red. You have the price below the Heikin Ashi, and in this case, we also have the support line broken. So entering below the support line is a good signal to go short. And in this case, we have again something between 60 and 80. Let's say you exit somewhere here, so somewhere around 60 pips. Okay, around 60 pips. And I guess if you added, let's say if you add another indicator like the MACD or the stochastic, you would probably see around here a divergence. Okay, so you can see here the price going down and the stochastic itself going up. Let's see here. Okay, so sorry. Oh, okay. Yeah, okay. Okay, let's, so you have here some sort of divergence, a bullish divergence in this case. Let's look at the MACD also. Okay, so it gives you a clear signal that the trend is weakening, and I would probably around here close the short trade, because you can see here already a second divergence. Here's the first one. Okay, we have low, we have one low and a lower low on the chart, but we have a higher low on the MACD, and the second divergence on the MACD usually almost always works. Okay, almost always gives you a reversal indication. In this case, again, you see the price going down once more and the MACD going up. Okay, so for closing the trade, you can always add one or two more indicators, even just stretch them or minimize them, not to take too much room, but you can still see the divergence here, how the MACD, the MACD, and even the stochastic start going up. So that's for short, and again for long, blue candles, blue multi-time frames. The price is above the Heikin Ashi candles, and the Heikin Ashi is going up. It's very nice. It's very this smooth Heikin Ashi is very comfortable for seeing the trend with without too much noise. The only problem is that it's a lagging indicator. Okay, it always shows you things after they happen, after they start. So, for example, here the price started going well. Here it's actually, since it's a 15-minute chart, it started reacting pretty fast, but sometimes it reacts much later. For example, here you can see how the price went up all the way and then retraced, and only here, after the price retraced, after it had retraced, the Heikin Ashi changed to blue. But on the other hand, you can always say, how would I know? How could I know that the price would go up here? So okay, it went up here. It retraced. The Heikin Ashi gave it a nice support, and then started going up. So I don't care. I don't mind missing, the beginning of a trend, but at least the Heikin Ashi gives me the majority of the trend. Okay, I would say the biggest part, or the most important, and with the strongest momentum of the trend, and that's what I'm looking for. Okay, so it's really nice to work with the system, and you can see here the strategy. You can see here you can enter. If it's only according to the indicators, you can enter around here. It's close to the Heikin Ashi. All indicators on the multi-time frame are blue. Let's remove this. Let's remove the stochastic here. It's blue. The Heikin Ashi is blue, starting to point up, and the price is going up. You can always, if you again wish to be a bit more, if you're not as aggressive, you can always wait for the price to close above this descending trend line. Okay, so around here somewhere, when this candle starts going up, then you can enter. Or if you're even more cautious, you can always wait for the price to go above this resistance line here. Around here, it still leaves you with, let's say, here it's 40 pips, and if you stay all the way, I don't know, around here, it's a bit more. But even if you entered here, it still gives you about 40 pips, which is nice, within an hour. And if you enter here, only according to the indicator, it's around 70 pips, which is very nice. And you can see here again the stochastic, the Heikin Ashi giving support to the price. Okay, there's a question here from Peter. If it's a moving average tool, it's a much better visual moving average than the traditional line. I guess. I mean, yeah, because it's a moving average that also gives you the strength, or it filters out noises from the price itself. It's very comfortable. The thing is that this Heikin Ashi, okay, you can choose here the method. In this case, it's smoothed. Okay, the period here is 6. It's combined of 2. You can always play with it and see how it reacts to the different parameters. Okay, here it's again combined of 2 periods. Both moving averages of the moving averages that compose this Heikin Ashi are smooth. Okay, and you can always try to change it. Let's say I'll try 8 and 5 instead of 6 and 2. Okay, let's see how the Heikin Ashi changes, and you can see it shifts a bit lower. Okay, obviously because I chose longer periods, so the moving average, or the Heikin Ashi, is a bit farther away from the price, and it's a bit more. It's a bit more smooth, but I think the default setup is pretty good, especially for strong trends. Okay, because it's more or less like the 5 moving average, which, as we know, is the first moving average to which the price usually reacts. Okay, especially again in strong trends. So this is the system, the first trading strategy that I wanted to show you, and the email you received mentioned the gold, but you can see here how beautiful it is also for other instruments to trade, and I guess it works well with every currency pair. And here we can see the dollar yen. Okay, for example, the dollar yen obviously gives us fewer opportunities, or because the moves, or the trends on the dollar yen are not as strong, or the momentum is not as strong on the dollar yen as it is on other currency pairs, but still you can see some nice moves here. And okay, the pound dollar, for example, look at these beautiful moves. Okay, again, we can't see the gap because of the Heikin Ashi, but the moves here are really nice. Just let me, and I recommend changing the time frame when you apply the indicators or the system on your charts. Just change the time frames once or twice, because sometimes the indicators don't always show the right information. Okay, we saw earlier that the M30 was all red, which was obviously wrong. So I just changed the time frames, and now we can see here everything here is blue, everything here is red. So that's this trading strategy. It's nice. It's simple to use. It's very graphic, as you can see. You don't have to make too much technical analysis here. What you do have, obviously, to bear in mind is support and resistance areas. If you have other indicators like the MACD or the stochastic, to watch for divergences or things like that. And always look left. Okay, I remind you, always look left. You see here, around here, this resistance area. Okay, you know the price is approaching the resistance area. Always be careful not going long, or opening a long trade in just before a resistance area, and not going short before a support area. And that's it. You can always set your support and resistance lines, trend lines, and other indicators as you wish. Okay, another question here from Wilfred. Do I know where you can find a ForexP dealer's spreadsheet? I'm not even sure what you mean, but you can always contact your account manager. Okay, because I'm just giving webinars for Forex Place, but I don't work there, so you should contact your account manager, Wilfred. And what are the parameters of the indicators? So again, the indicators here are set to default, but the smooth Heikin Ashi is 2632. Okay, so that's the default Heikin Ashi smooth setup. But and you just receive these indicators as is. Okay, and the MACD is also default, set to default, and this is the price. So there's nothing to change here. Okay, if you don't have any other questions, what we'll do is review another trading strategy. This time for scalping. For 1 minute, I'll admit and tell you that personally, I don't like to trade the 1 minute charts because they're too noisy, and the moves there are sometimes, or most of the time, are very short. And especially if you don't have low spreads, then trading the 1 minute chart can be costly, because you pay you pay more for the spreads than you take out of the market. But I'll show you this trading strategy anyway, because it involves the smooth Heikin Ashi too. It also uses CCI, RSI, and stochastic, although that's not obligatory. I would even, I'll remove it. Maybe I'll add it later. This trading strategy, again, is for the 1 minute chart, and it uses the simple candles here. You can either use the candles or the closing line, the close line, with the Heikin Ashi. Specifically in this trading strategy, it also sets the pivot lines from previous days, pivot points and highs and lows and other indications, because when you work on the 1 minute chart you can't really see the bigger picture, okay? And even as much as you look left, you don't see much because it's only 1 minute chart. So this system sets some key resistance and support levels, so you can be aware of possible support and resistance. For example, here you can see how this area, which is the 23.6 Fibonacci level, gives some support here. Okay, so if it's support, you might enter short exactly around here because it may find support and the price may turn around. If it's broken, you can always say, okay, I have a resistance level here. So again, the smooth Heikin Ashi with regular Japanese candles or the close price. And what we have here are two indicators, the trend CCI, which is set to 34 and 170. Okay, so it's called the double Woody CCI. Again, you can I can send you the system to your email, the indicators. You can look it up online. The double Woody CCI, which is set to 34 and 170. Okay, that's 170 is 5 times 34. And this indicator gives us a histogram that shows us the longer time frame trend. Okay, it's the 5 minute trend, and the yellow line is the faster line, which gives us the shorter time frame trend. And what we want to see in this indicator is for short signals to have the price below the smooth Heikin Ashi. Obviously, the smooth Heikin Ashi needs to be red. The double Woody CCI has also to be red, and the yellow line, this entry line or the signal line, has to be below 0 and going down. Okay, so it has to be below 0 to give us the indication to go short and going down. This again, the histogram, the red histogram in this case, gives us the time frame, the trend of the 5 minute chart. Okay, that's why it's just like we saw, it's 5 times 34, which is 170. Okay, because we have the 5 minute and the 1 minute time frames here taken into account, and we want to enter short when we have the trend, the candles going, okay, bearish candles under the Heikin Ashi in red, the yellow line breaking the 0 line, okay, the 0 point, and going down while the histogram is red, and preferably also the RSI, which is RSI 8, going below 50 or below 55, and even better, below 45. Okay, so around here, that's a setup for short. We have red Heikin Ashi, we have bearish candles, we have the yellow line breaking below 0 with the red histograms, and we have the RSI below 45. That's a signal for short, and in this case it's almost a 40 pip it's a 40 pip trend, or a 40 pip move within, let's say, 1 hour. Okay, and you can see that during this whole move the Heikin Ashi remained red, the price remained below the Heikin Ashi, and every time it reached it, the Heikin Ashi gave it resistance, okay, and pushed the price lower. Again, it's smooth Heikin Ashi, so it's just like a moving average. We can see the histogram in red. We can see the yellow line remaining below 0 and the RSI remaining below 45. So all the indicators here give us a beautiful downtrend. Obviously, since it's a 1-minute chart, you have to stick to the screen. Okay, you can't really move much, and you have to follow each and every candle and each and every signal. And around here, the Heikin Ashi turns blue, the yellow line goes above 0, and the RSI is above 55, meaning there's no point in staying here. Not only that, but you can always also see that as the trend is going down, the yellow line here, the CCI, starts going up. Bullish divergence. The RSI is also going up, another bullish divergence. So even on a 1-minute chart, you should be aware of these signals or these alerts. Okay, divergences, especially when they keep showing as the trend is going, may indicate the weakening of a trend. Many times when I trade, I used to see many times in strong trends, I used to see divergences that eventually didn't do anything or disappeared as the trend continued. So I'm not saying that every time I see a divergence it really means the trend is over, but it's something you should be aware of, especially if it's a 1-minute chart and the moves here are not very long and they change constantly and sometimes very fast, and you don't have much time here for hesitation. Then you should be aware of these things, and if you start seeing indications for reversal, just close the trade. Especially if you took so much from the market, you can say thank you and just wait for another signal. And Marshall, just to please, okay, you're asking me to send you these strategies. Just please send me an email, okay? Okay, just send me an email and I'll reply with the indicators. Sebastian, you say you closed short and went long half position at 32. 0.32, you mean, are you talking about, yeah, 125.32, that's what I figured. Very nice, very nice. So you're good. You have enough, you have already about 20 pip profit, which is great. Awesome. Can you share what made you go long at 125.32? What were you using, or did you see any special indication that made you go long here? 125.32. Yeah, it was just almost at the bottom of this trend. So it's interesting to hear, Sebastian, what made you enter long here and close your short. Okay, again, Marshall, please just send me an email to yanko.fx@gmail.com in case I, if I don't remember, because I'm not sure I can copy the email you sent me here. So just send me an email. Okay. Any questions, guys, regarding this trading strategy? Let's try to look a little bit backwards and look for other examples here. Okay, Sebastian is saying you saw the 61.8 retracement and that the trend on the 1 minute is getting weaker. You were 100 pips in plus from your short. Wow, that's great. Trade yesterday evening, and you didn't want to give it away anymore. Very nice. Wow, that's awesome. 100 pips, that's beautiful. Okay, so what you okay, you opened it last night. Very nice. Then hopefully many people will buy. Yeah, we'll have to wait and see. But I guess, yeah, I guess the market will continue. Will try to move a little bit upwards again, and you know, the euro dollar went down pretty much, but the other currency pairs didn't go much down. For example, the pound dollar was moving mainly sideways in the last few hours. Yeah, it went down and now up. Anyways, okay, let's take a look at a few more examples. Here we can see another short setup. Okay, somewhere around here. We can see Heikin Ashi in red. We can see bearish candles. We can see the yellow line breaking the zero, and the histogram is red. And the RSI below 45, and we have a downtrend here of 30-something pips. Okay, and again, it's all short because the histogram is in red. Let's look at this here. Here, there's no clear setup because you can see that the yellow line is all, I mean, for those of you who are really aggressive or impatient, you could take a long trade here, but I would, the setup should be when the histogram is already in green and then the yellow line crosses from below zero above, then you enter. But here the yellow line was already above zero, so it's not a strong signal. Okay, let's look for a long trade somewhere. So obviously, okay, here there's a small setup for long. Okay, the RSI, the Heikin Ashi is blue. The RSI is above 45. The histogram is green, and the yellow line is going up. And you can see here it's just about 10 to 12 pips. And you can see here that it stopped at the resistance line. So if it hesitates and starts going down, obviously you don't have any reason to remain in this trend. Okay. Yeah. All right, Sebastian. Good luck. Yeah, I wish you good luck in your long trade now. So this is it for this scalping system, the scalping strategy on the CCI. Just before we finish, let me show you something from Friday. You can see here a nice setup for long, even without any indicators. You can see here just a nice uptrend, rising uptrend line, and you can see how the price stopped around here, and we have double support both from the price from previous support line, and here we can see how the price checked it again. And here we have double support. Okay, we have the trend line, we have the support line, we have even a double bottom. We have this divergence here. Okay, although these bottoms are the same, we have the same lows. Okay, these lows are going up. All indications to take long. Okay, so even if you take long for a few hours, it's still 70 pips. And that's just trading without any special indicators, just with the price action of a trend line and a support line. Okay, so that was a beautiful move of the pound dollar on Friday afternoon. You're asking, Sebastian, what is the difference of my strategy compared to a normal moving average strategy? Again, with this, I don't know if you're referring to the gold or the CCI or whatever, but the Heikin Ashi is not only a moving average, it also gives you the momentum by signaling the color of the trend, okay? Okay, so it's not only a moving average. It really gives us a momentum by signaling it's all red. Okay, it's just graphic. It shows us very graphically that the trend is a downtrend with the Heikin-Ashi color in red. That's it. Okay, you can always use maybe just a simple moving average that changes color as it changes direction. Okay, if it's going downwards, it's red. If it's going upward, it's blue. But again, it's just Heikin-Ashi. Many people like to use it, and the momentum is by the color and the size of the candles. Okay, if the momentum is strong, we can see full, longer candles. If the momentum is weak, we can see the wicks on the candles, and we can see smaller candles. So the Heikin-Ashi gives us multiple indications: the color, the length, the direction, the wicks, everything. Okay. That's it, I guess. Those of you who trade the S&P with the COP, the center of price strategy, you could have taken some nice moves here. We could. There was a nice move here on Friday. When was it? It was last week. Wait, just a sec. Here on Friday, we can see here how these baseline moving averages gave nice support. Okay, and we can see the wicks here, nice support, the price turning around these moving averages and going up. So it's a beautiful support here from this trading strategy. And that's it. I mean, again, we'll review some of the trading strategies again later on in future sessions. Tomorrow we'll take one or two more trading strategies, more for swing, like intraday or a few, couple of hours or a few hours or even a couple of days trades, not pure scalping. And on Thursday, the MetaTrader 5. Thank you very much for the inspiration. Thank you very much for attending. Thank you very much for your questions and feedbacks. I hope you enjoyed this session today and learned a few more things. And again, try to make your trading simple, safe, with risk management, money management. And I wish you a good trading, and I hope to see you again in coming webinars. So have a wonderful week and good luck. And thank you again. Goodbye.